Hello, hello, hello. So this is a mic test. Hello, Antoine, how are you doing? Can you confirm if the audio is clear and the video is visible nicely? Audio is clear and the video. Yes. Let me do one thing. Let me quickly check the microphone. It looks like my voice is having that frequency issue again. Probably something to do with the DBX. So now I have changed the microphone. There was some issue with the past one, and I have refreshed the screen. That's why you saw that there was a breaking. Clever. So if you can check now if the audio is clear with this new setup. Okay, at my end it sounds clear. What about you, David and Pawan? How's the audio now? Thank you for the confirmation there. Good evening, Anna. And good morning and good evening and good afternoon to you guys. So my name is Nirav and this will be 27th iteration of the Trading Opportunities webinar. Before we begin any further, let me just quickly load up the disclaimer. So guys, let's get done with the legalities first. So here's the disclaimer on screen suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, your loss of profit, or any other situation that might arise out of you using this information presented. Thank you for the confirmation, Antoine, Pawan, and others. So, with that out of the way, let's now head over to the actual stuff. Hi, Tulgat on TradingView. So, the way we will proceed is first of all, I'll give you a quick introduction, right? Followed by that, we will be discussing Euro USD, EURCAD, USDJPY, EURJPY, crude oil, gold, S&P's 500, Nifty 50, and Bitcoin. So these are the standard pairs that we will discuss, right? And let me just load up the screen. Okay, so here's the quick introduction, guys. My name is Nirav Yadav. I'm the admin and owner of 50eyes.com, which is a website where I've been publishing my market views for past 7+ years. And I also maintain a YouTube channel with the name 50 Eyes Market Analysis, where this webinar is broadcasted live currently, as well as it is also broadcasted live on my TradingView handle. Right, you can check this or the last few webinars by heading to my YouTube channel and clicking the live button. Therein you will find all these webinars in the trading opportunities series. And if you are new here, this is the 27th webinar in the series of these trading opportunities webinars. What we do here is, as is quite clear with the name, we look out for trading opportunities on the number of symbols, which include forex pairs, currencies, basically forex and currency, same thing. Sorry, Bitcoin, commodities, global indices. So that's what we discuss here, right? Apart from that, a little bit more about my work. I am also the author of the book Think with the Markets: Secrets to Achieve 80% Plus Accuracy Using Elliott Wave, which is available on Amazon's Kindle platform for instant access. Right. Next, I would like to point out that I hold a above industry standard accuracy of 80% plus for 6 plus years. It can be checked by anybody by visiting my website 50eyes.com/. forecast dash accuracy, or you can just go to 50hours.com and just click on the forecast accuracy link here. So as you can see, by scrolling to the bottom, let's just quickly check. 2016 accuracy was 83.34%, 2017 was 87.5, 2018 was 84.61. You can, by the way, just scroll down, check the instrument name, right, the date when the analysis was done, what was said about the instrument, the link for the video, and what happened. Similarly, if we go to 2019, accuracy is 84.88, and again you can check the date, the instrument name, crude, gold, silver, whatever, right, the price at which the analysis was done, what was the analysis, and the video link serves the proof. So on and so forth. We go up. By the way, if you can check, 73 out of 86 worked out in 2019. 2020 again 88.52, and if you scroll down again, the same thing. And 2021 82.22. I haven't had the time to compile for 2022. This is a very time consuming thing, so you will have to just make do with 6 years. Why I'm showing you this accuracy and stuff, because generally even a 60% accuracy in this business is very high, and here I have 80% plus for 6 consecutive years, and seventh once we compile the 2022 one, right? So this shows of my skills in my area of expertise, which is advanced Elliott wave, the most outstanding form of price action analysis out there. With that out of the way, yes, of course, one last thing. We have the new batch upcoming for the personal classes, which are called Training Program LT. So if you are interested in learning directly from me, and if you have completed my video course, then you can contact me via the Training Program LT link. Only I'm taking people who have gone through my video course right now. No new students. Okay. So that's just one quick announcement I had to make. Right. So with that out of the way, let's remove this and head over to our discussions. So this will be the sequence of our discussions. First, we will discuss US Euro USD EURCAD, USDJPY, then EURJPY, crude oil, gold, S&P, Nifty, Bitcoin. Right. So one last time, if somebody can confirm the audio and video is both clear to you guys, then we can actually begin the actual process of going through with the instruments and discussing them. Anybody here? 7:42. Let me check. Okay, thank you, David, for the confirmation. So with that, let's start off with our first discussion here. Let me load up the Euro USD chart. Thank you, Anna, for the confirmation. Now, so Euro USD, if you are following me for the last few webinars, we were able to catch this movement. We were able to catch it with partial entries. Let me see what color is this. Let's go with yellow today. So we were able to catch this up leg, right? And when we discussed the last this instrument last time, basically I just said that if you are long, just keep trailing. There is nothing new to add here. And since our entry was around 1.0498, 4948, roughly speaking, there has been a pretty good movement of about let's see, what is it, 3.77%. So there was no issue with trailing. However, looking at the current price action, it does look like it has more upside remaining. There are some other correlated market factors which are suggesting that it might go up. So if you are trailing, obviously keep holding, and the next target, the next immediate target would be 1.09508. Keep in mind this chart is using the IDC data feed, and if you are using a different data feed, these price targets will vary a little bit. But for now, it is 1.09508 on this uh, data feed, which is the next target which I'm thinking. So longs keep on holding, nothing to do here, and intraday wise, we can look for some longs as well. Basically, I mean, if you are going for new positions or new longs, then I think intraday wise short term longs can be created here. Again, the targets remain the same, but the risk to reward will be a little bit not in our favor in intraday, which is generally the case. Basically, nothing new to add here, and I'll just quickly discuss the whole count we are following here. So, for those of you who are again new to this webinar series, we are looking at this chart from this point of reference around 0.95357, and we are expecting that this is the progression of this market. Basically, I'm talking here is an impulsive Elliott wave progression, which always goes in 5 waves, and roughly speaking, it should look like this. And you can just match it on the actual chart. Wave 1 is here, wave 2 is down, wave 3 is up, wave 4 is down, and this is the fifth wave. So we are expecting a completion of sorts, not shorts. And that about it sums up the discussion for Euro USD. Let me know, guys, if there is any doubt. If not, then we will just quickly head over to the next chart, which will be the chart of EURCAD. By the way, if you guys are able to catch whatever we were discussing, please type in clear or understood in the comment section so that I know that everybody is on the same page. Thank you, Steve. With that out of the way, let's head over to our next chart, EURCAD. Looks like it has hit our upside alert, or has it? So, anyways, let's just quickly let me remove it. Second. So, EURCAD, before we head over with the current price action analysis, let me just quickly point out that if you were not in the last few webinars, then just summarizing here that we were able to capture this leg down. This was our target one. So, this leg down or this movement down, let's say, movement down we were able to capture. Next, we were able to take second entries for shorts and able to capture part of this movement as well. The entry was again at the break of this channel, and this was a target too, which was actually hit precisely, and the market exactly reversed from here. Right. So with these two trades already being taken and closed in profits, now the next setup we discussed in the last webinar was that if this market goes on to take out the highs near the last highs, basically somewhere within this region, then we will again be interested in longs. So we narrowed it down to the last high, which is around 1.45604 on this FXCM data feed. It is currently hovering very near to it. So basically, it's short term long opportunity here on this counter, right? Two things are possible here. One thing is that the whole correction is complete here. One second. Yeah. So the whole correction we started from this point complete here. If that is the case, then this market will see much higher movement. That is, let's say 2:1 risk to reward, or maybe even higher, right? Second possibility is that the correction we started from here, which is our point of reference, is not yet complete. In which case, this market will probably take out the high, most recent high, and then it can still give a reversal within this price range, this box range. So that probability cannot be ruled out. So any longs taken at this point in time needs to be cautious longs, right? And that's basically the scenario here we are taking. Longs wait and watch, not even wait and watch. It will be triggered, I believe, while we are doing this webinar, and that's our take on EURCAD. So Steve is saying yes, clear, and also scalp Euro USD as it is pushing up. Nice to know that, Steve. Gary is saying gold. Of course, we'll discuss gold, EURCAD, stop loss hit. I'm not sure what you're talking about. We did not have a trade here. Only discussion was on long side. Perhaps you missed one of the webinars here. If there is a trade which did not work out, I always point it out in the webinar itself. So that was it for EURCAD, guys. Let me know if there is anything to be more clarified here. If not, please type in understood or clear, and then we'll move over to our next chart, USDJPY. So what about you, Antoine, Steve, Pavan, David, Clever? Are you guys still with us? If you are, let me know in the comment section. Thank you for the confirmation there, Steve. And thank you, David, as well. Thanks, Jill. And Gary, one more thing. If you are not attending every single webinar, please don't type in here this hit or that hit. That sends a wrong message to the audience. As I mentioned, if something does not work out, I always point it out. In this case, nothing like this was suggested, which you are typing in here. Let's head over to our next chart, which is USDJPY. So USDJPY, if you guys recall, our entries were shorts were triggered here, right? And our target was this level. And last time when we discussed this webinar, we were suggesting that we are probably inside a wave 4, right? And once the wave 4 is complete, we should go and touch the target. And we were saying that the stop loss should be higher than this level. Basically this line, this blue line at 129.359. So if the market went above 129.359, we were of the opinion that we should not be holding the position any further, right? So basically what really happened is quite visible here. The market did go and hit our trailing profit stop loss, or trailing stop loss basically, but I'm saying profit because we were entered here, right? And final exits around here. So it is still a profit of this much for those who did not book anything in the down low. So with that, our setup was finished, or basically the trade was finished, right? And let's see what it is really doing right now. It has gone rather too much up for expected wave 4, which is basically suggesting that it might be doing something of the sort of a diagonal structure, right? It is basically the only clear explanation at this point in time. And the price action does seem to convey with it, it should soon go ahead and touch our final target, right? And probably even surpass it. So long story short, USDJPY is a short. It's an intraday short as well. I mean, there's nothing to add. It's still falling, and it is most likely going to hit our target level, or the new target. Not new target, the next target pretty soon. right? And because this webinar is done only 3 times a week, I'm not able to catch every single opportunity in front of you guys. But this was a short much before our webinar, or this webinar is conducted. So as I cannot cover everything live, this is a bit of a late entry right now, and profit potential is this much. And in this particular case, the stop loss should be around 129, technically speaking, or even higher than 129.15 is all right. So that is as is visible negative risk to reward, but it is still a short nevertheless. So that was our trade on USDJPY. The shorts worked, and new shorts again are active here. Okay, let's next check EURJPY, which again had a clear setup just like USDJPY. Let me know, guys, if there is any doubt on this counter, and we will discuss. I'll wait a few seconds for your confirmation. Thank you, Steve, for the confirmation there. So, guys, let's head over to our next chart. And thank you, Clever. So, let's head over to our next chart. The chart is EURJPY here on screen. And nothing really to guess here. It has sort of shown a similar movement, right? Similar movement in the sense that spike is also visible here on this chart. So last time when we discussed this chart, or not last time, actually two, three webinars before this one, we had taken short entries. I'm just pointing it out for the people who are joining in for the first time. We took short entries over here at the break of the channel around 142.216. Let's just say 22, roughly speaking, for the sake of convenience. Around this level was our entry, right? And our target is obviously quite visible here around the level of 135.922. Now, when we discussed it the last time, which was on 16th of January 2023, my view was that, let me just quickly check the timing. So somewhere around here the price was, right? So my view was that we should book partial profits on the shorts that were active. And the reason was that this market had given quite a nice and big downward movement. And the thing was that we could still hold the remaining shorts with trailing our stop loss. So those who had booked the partials, well done. If you hadn't booked the partials, now you know why we need to do that. Now you know the importance of taking the money out of the market when it shows it to us, right? Because if not, then your whole position would have been hitting the stop loss on the trail, and the profit would not have been much from what I can see. So, anywho's, the thing is that the shorts are again active on this counter. The first short we were able to capture part of this movement, right? And the second short entry is again active, just like we discussed on USDJPY, right? And target is still valid. There is nothing to add here. Only thing to do here would be to check what is the updated count on this counter, which let me see very quickly. Hmm. It looks like it may be heading down with the nested formation. There are some alternate views here, but I don't think they would be necessary as the movement downside is quite strong, and it should just be all right with one count here. So Steve here has commented in the YouTube chat that I booked a profit trailing EURJPY. Thank you. You are welcome, Steve, and thank you for pointing it out for our dear audience. Right. So with that, our trades that have worked out so far in the last 26 webinars comes out to, what was the number last time? So when the last webinar was done, 24 trades discussed during last 25 webinars played out. So now we are in 27th webinar, so we are checking out the last 26 webinars discussions. 24 plus 1 USDJPY and plus 1 for EURJPY. So we have 26 trades that have worked out in the last 26 webinars. That's a good looking number. So guys, as I keep saying to you guys many times, I have said that if you are going to check these webinars out, it is best you do them, do the live joining and check it while I'm giving the live commentary, because as you can see, we have pointed out two trades which are actually active right now, and if you are watching it as a recording, the opportunity most likely would be gone by then, right? And also 26 trade within 26 webinars, right? That is quite good, if not excellent. I wouldn't say it myself, but it's nice. So anyways, stepping aside from babbling about myself or my work, let's just head over and see the next chart. One second, let me see if there is something else to add here. Much lower levels are also possible, right? Specifically, we would look out afterwards for the level of 133.9, right? So we can do one thing, we can just take out partial positions at target 1, and then if it goes to target 2, we will have some active positions there as well. So that was about it for EURJPY, guys. Let me know if there is any doubt or comment. If not, I would appreciate you typing in clear or understood before we move over to the next chart of crude oil. I'll wait for a few seconds to hear from you guys, because there's always some sort of audio delay. Thank you, Jill, and thank you, Anna, for the confirmation. So now let's head over and check out what's really happening with the crude oil. So crude oil, when we discussed last time, there was the bearish possibility which we discussed. We just type it 26 trades that worked in 26 webinars, because if there's more of them which we check, then we can just type it in here or add them. So yeah, getting back to crude oil, last time when we discussed, there was the possibility that there might be a continuation pattern, possibly as a triangle, right? And I said that it's not a very high probability scenario, and if it works out, we will only be interested in selling below the level of 72.524, right? And we were interested in going long above 81.533, which is exactly what happened. My alert was triggered, and long entry was triggered here. Now if this is the count which is going on, which looks to be the case, then we can possibly be seeing what looks to be a possible diagonal formation. Just quickly draw that out. So basically what I'm saying is that what we are seeing here is, from this point of reference, around the price of 76.593, We seem to be having a possible wave A up, a B down possibly. And what looks to be right now the case is that we are most likely heading up for the wave C. Our expectation is that this wave C could be very well a possible diagonal structure. And by a diagonal structure, we basically mean that this will be the wave 1 up, this will be the wave 2 down, and the wave 3 should take out this high. Right, once it's complete, the price action should overlap with the wave 1, and once that is complete, we will see a wave 5 up. So basically, long story short is that we are expecting two legs in the upward direction, one for the completion of this 3 and one for the completion of the 5th. Intermediate wave 4 should be corrective and moving in the downward direction. So that is the rough outlook we have on this counter. Right. So let's just check further things. We already have the marked target zone here. So this is where we will expect the market to start showing us some resistance, which is in the price zone of 82.162 to the upside at 84.826. So within this region, we expect that this market might be able to complete the diagonal structure. However, it does look like it may even go higher than that. So for now, intermediate or not even intermediate, short-term longs possible with the upside maximum target in the safe zone around 84.92, and basically that's our setup on crude oil. But do keep in mind these are counter trend trades if this analysis is correct. With counter trend trade, I mean that once this structure is complete, we will expect a bigger downward movement to come. Right. Of course, it is possible that the market has completely done that already, and we will need to update the counts. But for now, the expectancy is something like this. Right. So all longs should be taken with caution. That was my take on crude oil here. Let me know, guys, if there's any doubt on this chart. Next, we will head over towards the chart of gold. And it looks like I have missed some comments. Let me see. So we still think taking a shot here is okay. David is asking on which chart, David? EURJPY, right? If EURJPY, yes, that's exactly what I said. We are still looking for bearish movements. Actually, the short was still active over there. And thank you, David, for the confirmation. Steve, oil is clear. I have taken long position for small target. That's good to know, Steve. And what else? David is saying, okay, got it. So it looks like we should move over to the next chart. And Shubham is asking, Sanfarma, Shubham, we are not taking any requests. I did discuss a couple of instruments here which are fixed. And in the future, when the participation increases, maybe we'll take requests, but not for now. Thank you for the confirmation, Jill. So let's head over to gold. So gold, if you guys are not following us for the last few webinars, I'll just like to quickly mention that on this counter we have captured multiple long trading opportunities. Some part of this up leg, right? This up move and precisely this whole up move, right? Then some part of this up move. Let me go further. And parts of this move. Basically, if you guys were following me in the last 2-3 webinars, you might remember that we were able to capture this leg down and then this up move as well. With this target was already placed. So I'm not just saying things, you can just check by going to the webinar which was conducted here near 11th January, whichever webinar was conducted near 11th January. I think it must be 25th or 24th webinar. Right, you can just check that we were able to capture not only this leg down, also this move up. But this was the actual target. And why am I pointing this out? Because with gold itself, we have been able to capture like 6 7 trades, if not more, and all of them have played out precisely. So again, another reason why you should keep attending these webinars live when they are broadcasted. Okay, and yeah, before I move forward with gold, let me make you the quick request here. Please hit the like button if you have not hit that already, right? Whichever platform you are using, hit the like button there, and make sure that once the webinar is complete, you share it with at least 3 people in your circle. Why do I say 3 people every time? Is that if all of you guys who are attending actually share it with the 3 people or 3 social media or 3 groups of traders, if you have a group of Telegram or WhatsApp or whatever, then it will exponentially increase our reach, which is definitely something required to continue doing these webinars, right? So kindly share. That's my request from you guys. And I will also point out that content of this quality is always under paid subscription services and whatnot. So I would request you to increase it so that we can increase our viewership and continue providing more quality content like this. With that out of the way, let's discuss gold. So last time when we discussed gold, we were already long, and I had placed a trail below this low of 1907. As you can see, the trail was clearly hit, right? And our idea was that we were expecting this will be a wave 4 and then possibly see a reversal for the fifth wave. So the trail was hit. That means the profits were booked on the existing longs, right? And it is still going higher though, and it is possibly going higher for our next target, maybe around till 2000 it will go, which was our next high target. So what we need to do is check what's really happening on this counter here, and that would require me to go a little bit on the lower time frame here. So give me a few moments. So it does look like it may be giving us a extremely bullish scenario. So I'm just going to update the counts in regards to that. By the way, since the gold longs have been closed, we will add +1 for gold as well. So last was 26 trades which had worked out in the last 26 webinars. So this will be 27th trade which have worked out in the last 26 webinars. Okay, so the analysis currently is suggesting that if this is the current outlook or this is the current way this market is proceeding, then we can see a strong up lag, because it would possibly be a wave 3 again if the count is being followed here, right? 1 second here, I did miss one thing here. Let me just quickly check that. The 3 4 5 here, and then that's done. Hmm. No, that's not correct. So that would not be correct. Let me just quickly see that one thing. 3 4, and then the fifth should be placed here. Third here, fourth here. So this count will be requiring a secondary check again from me, but it will take a lot of time. So I'm just doing the bare minimum over here in the live webinar. So yeah, the corrected outlook is that one leg up is remaining minimum, right? And the reason is that this 3 was incorrectly placed in the last count that I came up with. So if this is the count which is being followed, it pretty much does look uh, to be the one. Then the minimum requirement for the wave fifth is that it crosses the last high, which is more or less around 1929.72. Currently, it is already trading at 1922 something. So 7-8 points minimum is the target. Right. Next thing we can do is we can draw the channel 2 to 4. Project the parallel from 3, and the channel gives us the next immediate targets. Next immediate target for this counter will be around 1950. So this is my current outlook on gold. We expect that the upward movement is still continuing. Right? Minimum we expect it to go higher than 1929.449. Keep in mind the data feed is written on the top left, so check that, as the price levels will vary a little bit depending on the data feed you are using. And the higher target I already discussed in context of this price channel, and the extreme high target is around 2000. We already know that. We need to check that over and over again. So that's our updated take on gold. Currently, longs are active intraday wise, and these are the expected targets. Let me know, guys, if there is any doubt you have on this counter. If not, please do type in clear or understood so that we can move on to the next chart. Okay, thank you, Jill, Steve. And yeah, guys, request here, if you are joining the webinars, please join in with the real name so that I can actually talk to you guys like I do by talking to real people. All right. It is a bit weird and annoying to see these random names here. Anyways, so thank you, Anna, and let's get ahead with the next chart here. S&P's 500, which did not really move as we were expecting it to. Interesting things happening here. So let's just check what we said and what is really going on. So last time when we discussed S&P's 500, our view was that this market might be following a diagonal pattern. A diagonal pattern per se triggered shorts once the trend line is taken to a downside. So this was the white trend line. So the analysis basically was that if the market went below this white trend line, then we expect the market to go much lower, or if not much lower, then at least somewhat down, right? Like an A down, B up, and C down. So a little bit downward movement. We had also estimated the possible targets. Not sure if this is what I pointed out in the last webinar. Maybe this was done after the webinar in live market, but I was expecting around at least 39, 35, or maybe lower levels. However, what has interestingly happened is that the market has started to go up right after breaking the trend line, right? What that basically means is either of the two things. The first thing that it could mean is that this was indeed the diagonal, and this was the downward movement. While we were expecting a little bit lower, like 39, 35 kind of target somewhere here, market did not want it to go that much lower, and hence it has reversed. So if this is the case, that it did not want it to go for the lower targets and has already given the downward movement, completed it over here around what is this, 39.80 something, then this suggests strong upward movement, right? Strong means really bullish in this case. That's the first take I have on this counter. Second take is that it could mean that the whole analysis we have so far is completely wrong, and completely something else is going on over here which is not really visible to me right now. Right, so it can happen, of course. That's what stop losses are for. But for now, we will go with the first scenario, that possibly this market has completed the correction. Even if it's going to correct further, it should go sideways, so possibly within this box range, right? So that makes this analysis completely inverse of what we discussed last time, and now we are looking for bullishness instead of bearishness. And once we are looking for bullishness, let me check what are the immediate upside targets we should be heading for. Actually, this will require some more interpretations from my end, so I will not discuss extremely high targets on Elliott Wave perspective, but on price action perspective, we expect the market to take some resistance around the price level of 4047. Let's say 4040 for the sake of convenience. Currently, the market is trading around 4006. So we are expecting 35 plus or 35-ish points on this counter if it's decided to go up from here, which looks to be the case. Right, so that's our new take on S&P's 500. We are expecting the counter to go higher. I have just discussed the relevant details here, and I'll just quickly update the view. Okay, so guys, let me know if there was any doubt or anything you want to check on this counter. Also, the count will need to be changed here. If that's the case, then we will have to go with the impulsive formation in the upward direction. So if that's the case, straight up or sideways and then up. S&P's 500. Chill is saying clear, and I is saying for S&P not very clear. So Anna, let me just quickly give a small, what do you call, conclusion again. What we are expecting here is that the diagonal which started from here around 3800, which is our point of reference, has ended, and the correction which we expect after the diagonal, which we expected something like this, has also completed, but instead of going lower, it has completed right at 3980-ish level. Because the correction is completed prematurely, this is suggesting strong bullishness. Because it is suggesting strong bullishness, that's why we are looking for higher targets. What I've done is I've given just the bare minimum target, because as I said, this is doing something out of the context of what we were thinking, so I will need to reanalyze it, and it will take a lot more time than what we have in these webinars. So I'll come up with the detailed explanations, or what do you call, complete reanalysis in the next one. For now, we are updating our view to something like this, either straight up or sideways within this price range, orange box, and then up. So that's our take on S&P's 500, guys. Thank you for the confirmation, and it's good to know you got it, Anna. Now let's head over to Nifty, followed by Bitcoin. So if you guys remember Nifty, we had two views. The one view was that the wave X is still continuing, which will soon be followed by a will soon be followed by a downward movement. However, the current up leg seems to be suggesting otherwise. Right, the actual confirmation, as I mentioned before, is the actual long confirmation is above this price range, which is around 18 to 35 to 18 to 72. Once the price establishes itself above this range, then we can confirm and say with clarity that more upside is to be seen on this counter, right? But right now, since that is not happened, but based on the evidence of other global indices, I'm going to go with the analogy that most likely the correction has completed here, right? And if the correction has completed itself here, then we probably are inside the wave 3, right? So a gap up movement and strong up legs would not be out of the question, right? That is to be sort of expected if this count is the one being followed, right? More or less, if you are looking for confirmations, I have just mentioned the upside levels for confirmation. And if you are aggressive, then you know what count we are following, right? Anytime we are wrong, we will know only below the 17,860-ish level. So once the market closes below this, that is when we can confirm or say with the solid reasons that maybe the market is not really bullish. So that was my quick take on Nifty 50. Don't think there is much to add here. Basically, sort of a wait and watch if you are conservative trader. But anyways, let me know, guys, if there is any doubt before we head over to our next chart, which is Bitcoin. And for those of you guys who have joined in late or are watching it as a recording, I would like to again request that you guys hit the likes button on whichever respective platforms you are viewing this webinar on. And once the webinar is complete and the recordings are available, please share with at least 3 in your group of traders. If you have social media like Twitter, etc., you can just tag my Twitter handle 50 underscore eyes. And if you are having Telegram groups of traders and WhatsApp groups or whatever, please share the video links after the webinar is complete, because we definitely need to get more audience here. Right, with that out of the way, I did not see any confirmation or any doubt on Nifty, so I'm assuming it was all good. So let's head over to our last chart here. Last chart is of course Bitcoin. Thank you for joining in, Steve, and thank you for the confirmation, Anna. So Bitcoin, as we discussed last time, it sort of has not really changed even a single bit or done anything new. So as I said, we discussed last time that probably it was heading sideways inside a triangle, and that the minimum target was within this box range. By the way, we were able to pinpoint this entire move beforehand. So if you were following me, you would have been able to catch this. And our target was around, not around exactly at 21520, which has already been achieved, this white box. Now coming to the current analysis, we expected some sort of reversal to form near this box, right? Nothing of that sort has appeared yet. So I'll move these lines a little to the right. Now, if we see a reversal or a strong bear bar, that would suggest that possibly the market is heading down for the wave D, in which case we can initiate possible shorts with stop loss at last high, which is this high, exactly the high of the box, right? So that's our what do you call, bearish take on Bitcoin. Okay, and next thing we want to check out here is that we want to check if the market is not crossing 23,206. So if we see basically a price movement above this level, about 23,206, and the market maintaining those levels higher than 23,206, that would suggest that we have to relegate this triangle count, which was the bearish count, and at that point in time we will have to switch our view towards some bullish counts. Now, as long as it has not taken out this level, which is already, as I mentioned, over here marked by this blue line, then we can just keep going with the analysis we have right now on screen of the possible triangle continuation. And with that, I think we have discussed all the charts we come here to discuss. So guys, that would be all. If you guys have any doubt here, I'll just wait a few moments here. If not, that concludes our discussions of this 27th Trading Opportunities webinars. And we have, as I mentioned earlier, in the last 26 webinars, pointed out 27 trades which worked. So that's about it for the webinar, guys. And make sure you share it and join in live in the next one. You're welcome, Jill. Okay, guys, I'll be signing out now.